What's going on, everybody? My name is Kojo Forex. Today we have another legendary forex trader in the building, Kojo Forex. We are going to be talking about his trading strategy. Kojo Forex is a swing trader from Ghana, and you already know how he captures 200 pips in the market, 100 pips, 500 pips, 300 pips, 1000 pips on gold. So the strategy he used to do this is what I'm going to be breaking down for you all, so that you will be able to see how he do that, and from that also you can capture some knowledge and implement and start increasing and implement in your own trading strategy. He's a swing trader, so obviously if you want to watch this video, you are probably going to be a Kojo Forex follower or an aspiring swing trader. But before we get into the video entirely, subscribe to my channel, like this video, turn on your post notification bell so that anytime I drop a new video you will be notified. Also click the link in the description and join my forex trading telegram community where I share free trading signals. Alright, so now let's go over to the video and let me show you Kojo Forex strategy. So basically, talking about Kojo Forex trading strategy, he tends to believe that whatever stops the market from going furthermore can also stop it from going furthermore if it gets to that particular zone again. Alright, so and he also uses trend line, Fibonacci, and mainly psychological level to make his entry concentration. So now his strategy mainly is based on, he believes that, let's assume the market is going up like this, the market was going like this, all right, and all of a sudden starts to come down. He will now mark up this zone as the last support before this market started. He will now mark up this zone as the last resistance before the market starts going up, and he now tends to believe that if in future the market gets towards this zone again, there are chances that it's most likely going to respect it as a resistance and fall again. So if the market gets to this zone now, he will start looking for an entry. All right, so mainly his strategy is based on turn point trading. He trades turn points in the market, and that's why he is able to capture all those 100 pips, 200 pips, 300-400 pips in the market. All right, so now if the market gets towards this zone, what he is going to do is to start looking for an entry within this area. Since the market has respected this zone here as a strong resistance, so there are chances that it might also respect this place as a resistance. So you now start looking for what his psychological level, his entry criteria, candlesticks formation, chart patterns, and all of those things. Once he's able to once he's able to find that perfect confirmation candle and confluences he's looking for, he's going to go short on this trade, placing his stop loss above the last high and then capturing the trade down towards the last high, mainly on a higher time frame, and you will see him capturing a whole lot of more pips in the market. Alright, so another confluences he used is the trend line strategy, where he tends to believe that if the market has been, let's say, going up like this, going up like this, going up like this, he will tend to do what? Draw his trend line something like this. All right, and then if the market gets towards this third touch of the market, he is going to start looking for an entry within this area. However, he also uses his Fibonacci to also check if here might be a perfect retracement of this market for it to go back, but for it to do what? For it to go back. Yeah, so also sometimes you know that the market might not instantly respect this market. It might want to push down maybe to the last high, to the last low that it has captured from this down here, and then start to go up. So these are the things that he basically check out for before entering his trade. Now let's go over to the chart that I have already marked out for, and let me show you technically what he is talking about. All right, so looking over at this chart now, you tend to see that the market somewhere here, let's use here as an example, if Kojo Forex was in this market at this point in time, he would definitely, he's going to make a very good capturing of this trade within this area. Do you know why? This is also on a touch of a trend line. Based on his trend line touch strategy, you can see that the market has done what? The market has touched what? 1, 2, this is straight, and here happens to be the fourth touch of this trend line, and then giving him this what we call double top and also weak rejection plus other confluences he's using. He might also draw his Fibonacci within this area. He would have also been interested in placing his entry trade from this area, right? Of course, his stop loss is going to be somewhere above the last week here, something like this. I'm on a daily time frame, all right? So just know that I'm on a daily time frame as I'm doing this analysis, and his take profit might have been here. All right, this is about 400 people. However, if you go over to a lower time frame, you are going to maybe find an entry with a stop loss of about 82 pips, and then he will be looking at a take profit of 418 pips, almost 420 pips. Alright, so that is how he will have been able to capture these 400 pips, and then you know that he's going to hold the trade for a very long time, because you're not expecting this kind of trade to play out within 1 day or within 2 days. Remember, this is on a daily time frame. This trade that we play for weeks. All right, so you are going to have that proper mindset and psychology to hold your trade for a very long time. All right, so this is it for this particular type of trade. So now let's go over to another some sort of trade that he also trades. So if you basically look at the market here, you tend to see that there has been a break of structure here, which is what Kojo also looks at. There is a break of structure here, which you can see that this was a support that has broken. So what Kojo is most likely going to be looking at for is, in this market, he will not be interested in capturing this trade from here. But once the market gets to this particular area, which we can also, that is also on a touch of another trend line, because here has been broken, all right, he is believing that since the market has been held in as a support here, now it has been broken and gets back towards that zone again, there are most likely that is going to turn into a resistance. So he will start looking to enter the trade within this area. Alright, so if he had entered the trade within that area, here is what his would have been doing. His stop loss would have been somewhere here. And of course, his take profits, maybe first take profit would have been here, second take profit would have been here, third take profit would have been down there. Alright, and that his first take profit would have been about 361 pips. If you have taken this in, this would have been about 361 pips, and he will hold it. He is going to hold it to see him capturing 300 pips. Another thing he believes in is that what stops the market from going further more will also stop it from going further more again. So now if you look at the trade here, since the market has formed here as a resistance, there is every chance that if it gets towards this area, it's still going to form as a resistance. So he is not going to be interested in capturing this trade from here. But once the market gets towards this area, he will start placing his what? He will start placing his entry from this area, and then his stop loss might just be above the last high. All right, and then his first take profit is definitely going to be here, which is what? The last high, the last low that you are seeing here. And this trade is about 377 pips. So if Kojo was on this trade, as at this point in time, he would have made about 270 pips, probably been on break even and waiting for you to get to his first take profit. So you will have that proper mindset, because remember, the market is going to make some retracement and all of those things. So and also he also apply his psychological level within those areas. Just like if you look at here now, I tend to see that here is on a psychological level of 1.3500. yeah, let's put that here on a psychological level of 1.345. Yeah, that will be on a psychological level of 1.35. So the next one definitely is going to be on a psychological level of 1.35. But 1.35. Yeah, so that's a psychological level of 1.35. The next one is going to be on a psychological level of 1.55. 1.55. Yeah, that's on a psychological level of 1.55. That's where he will be taking the trade from. So since Kojo is somebody that trades many pair, let's look at another currency pair, USD Canadian dollar. Alright, also on a time frame, this here is he's a swing trader. He's going to be doing most of his analysis on the what? On the higher time frame. So this particular stuff is what Kojo would have done. Since the market has touched this area here, and this is in a psychological level of 1.45. 500. All right, that is one of the confluences. 1.4500. The market held as what? A strong resistance within this area. All right, it stopped the market from going furthermore from here and started to do what? And started crashing. So Kojo believes that what stops the market from going furthermore, we also stop it again from going furthermore again. So therefore, we start looking at this zone as a strong resistance zone. So once the market gets towards this area again, he will definitely be looking out for to enter this trade. All right, and let's assume he entered this trade from here. Guess how much pips would have made? Let's be looking out for, definitely his first take profit might be here. That is 700 pips. Second take profit will definitely be here. That is about 1900 pips, almost close to what? 2000 pips. And this is what he would have held. But remember, this is not going to occur in one day, so you are most likely going to have that proper mindset to hold your trade for a very long time, from weeks to weeks. All right, so now that this is here now, Kojo definitely will be watching at that same zone now. All right, as you can see, the market is currently trending here. The market is currently trending here. So if this market starts going up and comes back to this zone, Kojo will also be looking to go short on this trade from here to rally down. All right, I'm sure he have his eyes on this zone currently. This is USD Canadian dollar. He is definitely having his eye watch on this particular trade. If he doesn't have an eye on this video, but eventually he watch this video, so he will have his eye on it. So another thing that he also look out for, which is same strategy that we are talking about, is what stop the market from going furthermore, we also stop it from going furthermore, which you can basically see here from here now. All right, then to see that the market respected this zone as the first resistance. All right, so he is also believing that if it gets towards this space, is going to respect it. So definitely Kojo would have taken a trade from here, rally it down. All right, then he will also not be interested in capturing all these retracement trades. But once the market also gets towards this zone again, which you can see that it stops the market from going furthermore here, he also will be looking out for to do what? To enter this trade here. And of course his take profit would have been here. And guess what? This trade is almost, it should be up to 300. Yeah, this is 400 pips that he would have captured right there with his plus or whatever they move there. Right, so he might also have captured this trade. And do not forget, here is also on a psychological level. There's on a psychological level of 1.3 thousand. Right, so that is what he would have been doing. That is the first confidence psychological level. Another thing that he might have looked out for is the touch of this trend line. If he was actually going to capture this trade upwards, if he was actually going to capture this trade upwards, so he might probably have added his trend line. Let me minimize this. He must most likely have added his trend line. Let's say something like this. All right, so we go over to a higher time frame and look at it, then to see that the market has done what? The market has actually made the first touch of this trend line here, the second touch, and then the fourth touch. So they might definitely have captured this trade and rally it up. And also on the fourth of this trend line, all right, something like this, would have also captured this trade from here, rally it up, come back to this zone also and rally it down, come back to us here and also rally it up. And that's why you see Kojo Forex that most of the time he does not trade, but anytime he starts trading, then it's going to be a banger. It's going to be a banger. He doesn't trade until the market gets to his zone. But once the market gets to his zone and he finds the proper entry, then is a banger. All right, you already know that he's the GBP legend, the king of blues, because once he enters trade, most at times is going to be with little retracement. All right, and yeah, so that's basically it about Kojo Forex strategy. All right, I hope you found value in this video. If you found value in it, you already know what to do. Subscribe to my channel, like this video, click in the link in the description, and join my free Forex Signal Telegram community where I share my Forex trading signals to people, and also organize Zoom call meeting where I teach you how to trade and answer most of your confusing Forex questions. Tell me the next trader you want me to talk about his strategy, and I will most likely going to be making the video. Alright, so if you enjoyed the video, subscribe, like, and share this video. I'm going to see you in the next video. As of now, my name is Akil. Bye for now.